Hi, this is Dave Myers with Paper Trail Financial. Lately, I've received a number of emails and a couple of phone calls regarding loan amortizations and QuickBooks. In this screencast, I'll show you how to create a fixed rate loan amortization schedule in Excel and how to do the same thing in QuickBooks using the Quickbooks Loan Manager. In this Excel workbook, I've entered the input fields to create a loan amortization table that will break out the interest and principal portion of each payment. For this example, let's assume we're doing a vehicle loan. So we'll enter the amount financed, let's say $19,000. For the rate, we'll just say 7%. Number of periods, we'll say monthly payments of 5 years. So it'll be equal to 5 times 12. The monthly rate will be our annual rate of 7% divided by 12. To calculate the payment, we'll use Excel's payment function. So we'll say it's equal to PMT, tab, and Control A opens the argument dialog. Our rate is going to be our monthly rate. NPER is the number of periods, which we calculated as 60. The present value is $19,000 owed, so it's negative, and then $19,000. And Excel returns our payment of $376.22. To create the amortization table, first we'll put in the periods. I'll put in 1 and 2 and highlight them, and if we grab the fill handle on the bottom right and pull it down, we can fill it all the way in down to 60. To calculate the principal portion of the payment, again we'll use an Excel function, principal payment, so we'll say it's equal to P, PMT, tab, and then Control A to open the argument dialog. Our rate again will be our monthly rate, but this time after we click on it we want to hit F4 one time to anchor the cell reference. So when we use autofill, we make sure to always reference the monthly rate. Our period is right here in the period column. We will click the first month. NPER again is the number of periods. We'll click on that cell and hit F4 one time again to anchor it in the cell. And the present value is we owe $19,000, so we'll put negative and click on the amount financed. To calculate interest, instead of P payment, this time it's I payment. So we'll put equal I, PMT, tab, and Control A once again. And just like before, our rate will be our monthly rate with F4 once to anchor it. Our period is the first period. Our number of periods again is 60, F4 once to anchor it. And our present value again is negative 19,000. If we highlight the first month's principal and interest and then double click on the fill handle on the bottom right, Excel will fill in the table. And we can see in our first month we pay $110.83 in interest, and our final month only $2.18 in interest. QuickBooks has a Loan Manager feature that will calculate the interest and principal for you and split them out on your loan payments. But before setting up a loan in Loan Manager, you need to make sure you have your accounts in place. So first let's look at the chart of accounts. I'll hit Control A. We have a bank account in place. We can see the fixed asset account. We have a liability account for the principal payments. And if I scroll down, we have an interest account. To open Loan Manager, we'll go to the banking menu and select Loan Manager. We'll click on Add a Loan. Our account name is going to be our liability account, truck loan. I've already entered the lender here. We'll put in finance company. Origination date, we'll just use today. Original amount is $19,000, the same as we used in Excel. And we'll put in 60 months, just like we used in Excel. For due date, we'll say 4 weeks from now. For our payment, we'll use what we calculated in Excel, so Alt-Tab, and it's $376.22. 37622. We won't change the next payment number, and we're paying monthly. Our interest rate is 7%. Confirm our bank account. Our interest account is truck interest. Here it is. And we won't change the service charge account. When we click Finish, we can see that there's a Payment Schedule tab. When we select that, we can see our amortization table. And we have the option to print here at the bottom, which I'll do. And in this case, I'll print to PDF. This is the printed amortization table that the Quickbooks Loan Manager produces, and you can see it's exactly the same as what we came up with in Excel. Interest in the first month is $110.83, and I can Alt-Tab back over to Excel and $110.83. The Quickbooks Loan Manager can be used to enter your loan payments, and it will split the payment between the principal and interest on your liability and expense accounts. But you need to be aware that the Loan Manager will post the transaction before you click Save and Close on the check form. I will open the Loan Manager again and select Set Up Payment. Now everything looks correct for our first payment, so I'll click OK. Although QuickBooks brings up the check form, this transaction has already posted. It doesn't matter if we click Save and Close or not. And I can show you that by closing this out without saving. We'll go to the Vendor Center, click on Transactions, and with check selected. So be advised that if you use the Loan Manager, when you select Set Up Payment and then OK, the payment posts immediately.